Hello everyone, you're watching Oil and Gas Investor. In this episode, we cover the key developments in United States oil and natural gas markets over the past week. Before we begin, like and subscribe for key oil and gas insights. Let's start with the natural gas market. Over the past week, United States natural gas prices were flat week over week at $3.1 per million British thermal units. We maintain our view that prices could decline to around $2.5 per million British thermal units in April, implying roughly 20% downside from current levels. The key driver is seasonality. As temperatures rise and demand declines, United States natural gas storage has shifted into injection mode. The United States Department of Energy expects natural gas demand to decline by 16% in March compared with February, followed by another 14% decline in April. Demand typically reaches its lowest level in May, which corresponds to peak storage injections. How to position for lower natural gas prices? One option is the KOLD Exchange Traded Fund, which we added on Friday, March 27th. We also see natural gas producers as significantly overbought, including CNX Resources, EQT Corporation, and Range Resources. We already hold short positions in these names and plan to increase exposure. Now turning to oil market. Last week, price of WTI crude increased by 3.2% to $99.6 per barrel. We believe that within the next few weeks, the United States and Israel will reopen the Strait of Hormuz through military actions. Under this scenario, we expect oil prices to decline by around 30% by the end of April. We are already positioning our portfolio for this move. Check out the latest episode of Oil and Gas Investment Portfolio to see how we are trading this setup. Last week, the United States oil market delivered several local records. Commercial crude inventories increased by 7 million barrels to 456 million barrels, the highest level since June 2024. Since the start of military operations in Iran, inventories have increased by 17 million barrels. At the same time, the United States continues to balance the global refined products market. Net exports of petroleum products increased to 6.1 million barrels per day, the highest level since November 2024. Year to date, net exports have totaled approximately 456 million barrels. However, strong export growth is also pushing up domestic gasoline and diesel prices in the United States. What are you seeing at the pump? Let me know in the comments. Subscribe to stay ahead of the most important moves in oil and gas markets.